This is the Southside School of Financial Freedom Watch List and Market Report for the week ending August 28th, 2021. Our question this week is, what is smart money? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.69% on Friday and was up 0.96% for the week. The S&P 500 increased 0.88% on Friday and was up 1.52% for the week. The Nasdaq increased 1.23% on Friday and was up 2.82% for the week. Looking at the week, we can see that there were 12 up finishes versus 3 down finishes for the major indexes. On Monday, Tuesday, Wednesday, and Friday, all 3 major indexes finished up. On Thursday, they all finished down. The S&P 500 and the Nasdaq hit all-time highs on Friday. The new unemployment claims were 353,000 versus 350,000 expected. Bitcoin briefly broke above $50,000. Oil jumped 6% on Monday and continued higher during the week. Home sales rose 17.8% year over year in July. Treasury yields were mixed before the Fed Jackson Hole summit, and the Federal Reserve Chairman Jerome Powell stated that the central bank would likely begin tapering before the end of the year. New unemployment claims, Bitcoin breaking above a ceiling, oil prices increasing, home sales year over year changes, U.S. Treasury yields, and the Fed Chairman's statements on tapering are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is smart money? Smart money refers to the money or capital that is controlled and invested by big financial institutions and investors. The idea is that these big institutional investors know where the best investments are and they know how and when to make their investments. They have a comprehensive understanding of the financial markets. The term was originally attributed to wagers of gamblers with a track record of winning. That is, gamblers who made money by gambling. Do you understand smart money? Do you follow the smart money? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it is not taught in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or you can buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go. But you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list for the week ending August 28th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was CrowdStrike Holdings Incorporated, ticker symbol CRWD. It's in the first column. It increased 18.68% for the week, and it was up 1.27% on Friday. CrowdStrike is a provider of cloud-delivered solutions for the endpoint protection of computer systems. Their products provide antivirus capabilities to customers, delivering protection to defend customers against both malware and fileless attacks on their computer networks. Looking at a summary of results, you can see that CrowdStrike has increased just over 33% year to date. I did not trade CrowdStrike this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 1.55% versus 20.43% for SPY, a difference of 18.88%. The Southside is losing to SPY by almost 19%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit for a few months. However, it has been recovering for the last month or so. Will the recovery continue? We'll see. The portfolio is 69.23% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 19.06% of the portfolio. Cash is 11.71%. The cash flow generated for this week was 0.63% of the portfolio account value. The account value changed by 0.84%. Meanwhile, the S&P 500 ETF SPY changed by 1.55%. I sold option contracts on 2 positions this week, 2 calls that range from $352.39 to $403.43. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. Please check out the past videos and questions of the week in the description section, and like, share, and subscribe.